Hello, hello, hello. Happy Tuesday, everyone. How is everyone doing? Good morning, Sterling. Hey, Sterling, can you just put in some happy news? Good morning, Patrick. We got Sterling putting in the nuke stuff. We got everything going off. Oh, boy. Oh, boy. We just need happy news. Good morning, Jacob. What else? Thank you for putting in the news, Sterling. Let's see. Good morning, options 22. So we'll get some people filtering in. It's going to be a little quicker today. Something has again popped up this week. It's going to be a disaster now. So I'll try to get to the live streams every day. Just pay attention. Some days might have to be a little earlier. I should know more in a bit. What do we have? We had the business optimism index coming in slightly lower. We have a lot more Fed speak today. We have consumer inflation expectations. Redbook's not until a little late. I think it's releasing on next at 8:55. Other than that, you had a dovish Fed speak yesterday, which pretty much locked in at least a pause. Keep due to the yields being higher on the 10-year doing the heavy lifting, but we still have more Fed speak today. Sort of mixed with the mega caps. We had Pepsi report this morning with a beat. I'm watching for a pop and then another rollover in Pepsi. I think Coke's up in sympathy with that. Other than that, you still have aerospace and defense still leading with the Israeli war going on. Basic materials, financial, and industrials leading, and healthcare pulling back today. Fed watch, you can see it here. Odds of a November hike are just down to 13%. December is at 25. January is at 23. So nothing. I mean, these have dropped substantially after yesterday. And fear and greed, we're all the way back to fear mode. Where is cocoa, by the way? We've got a bounce for a couple days and no cocoa. As I said, Pepsi's today, nothing much after the open, really nothing tomorrow. Delta's on Thursday, and then we got Friday really kicking off the third quarter earnings season. Good morning, Christoph. Let's see. Well, I don't know. I can't read some of this stuff right now. All right, so with the S&P, we finished the little double pattern. The little mini double patterns complete. We also hit the other side of the rotation zone and right around this 37.5 harmonic. If we take out this 43, 82, 83 area, the next key target is 44.16, which would be the retracement, not from the highs in July, but from the highs back in September, at the beginning of September. So that's the next thing, if we do take this out, that I'm watching for. We are getting to cycle top. Would not be surprised to possibly see a pause in here or a slight pullback first. The key pullback areas. The minor area I'm watching, we have this little candle body support shelf now in about the 25% harmonic, about 43.45 to about 43.50. If we dropped below there, 43.26. Again, the next major target is 44.10. If you were looking for minor targets for the upside, this would be the harmonic level I would use, which would give, well, there you go, 4,400, and then we have a cluster at 44.10. So there's your levels. Yay. Let's see, just on the weekly, we're still at a cycle bottom. So even after a pause, we could see still a continued push higher for a little longer. But we will see with all the geopolitical stuff going on. You know, that's the bigger risk item right now. NASDAQ, remember, this became a triple, but we've hit the next cluster area. Two harmonics right there, this 15,215 area, and we're pausing. On a continued rally, the next major level is 15,375. 15,375. I don't really have a good area yet to do a harmonic, but would be about 15.3 should we get a pause here. So that's where we sit with the NASDAQ on a pullback level. Let's see if we can find some pullback levels. And these aren't, the major area would be about 1560 to 1575. That would be your major area. The minor area would be about 1510, 15105 to 15110. The Dow, and sorry, I've got to go a little quicker today. The Dow finished the double targets. The next key is sitting against this 37.5 harmonic, this 33.8. It's roughly 33,900. Above there, 33. That's really close to 33,940, and then I'd be keying off about 34,000 and 34,050. The major level though that I'll be watching is 34,180 on a. We got a big harmonic cluster there. Pullbacks in the Dow. Again, I'm favoring some possibly choppier to pullback price action, but, you know, based off the way the markets are acting, we'll see. We will see 33,700, 33,675 to 33,700. Some of these levels aren't clear yet. Russell, only roughly to the first and second target. Next, if it continues to push higher, 1786, it is against very key resistance in the second target. But if it does continue to push higher, 1786, and then the next target I would use would be 1798. Pullback levels, 1760. And then a major would be 1750. VIX closed back below 18, so the fear evaporating from the market. Even if we do choppy or slight pullback, unless we really start pushing strongly above 18 again, won't be looking for a bigger drop. You know, this can just drop out of fear coming away with, you know, again, I don't even understand geopolitical fears easing were some of the headlines today. Geopolitical fears, I don't think they're easing, but the market's already become complacent with it. But that's my key level still is 18. The DAX, we're in a channeling flag pattern up here. If it does continue higher, especially above about 15,530, the next major area is 15,610. So 15,6 to 15,610. Key supports now 15,338, 15,340. Notes. Little pause here, a little pullback in the notes, but that does not. When it gets this close, I'd use the stop raise right here, just because it's going against the rotation zone. But the invalidation point for the double would now be on a closing basis below 106.26 or a trade through basis below 106.18.5. Not expecting either of those to happen today, but we'll watch. More expecting it to get the pullback to this trigger area and possibly a pause. We'll see what the Fed says today. With lots of Fed speak, the yield, this would be, I technically wouldn't raise it yet on the yield. For the stop, it would still be about 4.812 on the closing basis. If you were going to raise a stop, if you were trying to short the yield, 4.783 would be on the closing basis. Right now, again, we've come back to the key breakdown point, the key area for the base of the double top. So anywhere between about this 4.7 to 4.72 is the key resistance area. 10-2s, interesting enough, little pullback, but now starting to steepen again. So dollar index, nice little pause so far at the bottom of the rotation zone. We break through there. Again, the next target is 105. Still remember, we're rolling over from a weekly top. So this needs a lot of strength to really, any bounces could still be just short term here in the short term before we start watching for a bigger possibly bounce pattern. Crude. We set up for a potential double a little yesterday, and that's turned into a triple top. So I'm really watching any break below about 85.20 or a breakout above 87. Those are the key levels. We break above 87. The target is about 87.90 to 88.20. If we break down, I'll start watching at least for a partial gap fill. At least for a partial gap fill, and see where the harmonics are. The first intermediate level, though, I'd use is about 84.40. Natty Gas, we had the little pipeline stuff. Was that with boy, it was Finland. Keeping an eye on this. Keeping an eye on this for now a pullback move, with the second target being right at the breakout zone. You can see here, even the third target into the rising rotation zone. So if that little triggers on a 4 or 1 hour basis, you can see it on the 1 hour basis, we'll start watching for a short-term pullback. That's not anything but a short-term pullback, because now we're coming into a lot of support area. Gold, if it does bounce again, 1890 to 1893, I'm more focused on a potential little rollover play, and there is no double or anything yet here, but the key support today is coming in about 1858. What else do we have? Hey, Royal Palms, how you doing today? I don't have specific results on that. I did not do specific testing with the bond market closed and everything else. So I can't comment on that. I would just go with the standard probabilities. So like when stuff happens, or even if I can't get in it or something's going on, I'll use still. Now keep in mind with the yield, it's aggressive because you're going against the rotation zone. But if you were going to do it, this would be a key area to set that up now, because it's come back to a strong entry point. So I just rely on now. It's not the standard probability, it's lower probability by about 5 percentage points, since it is going against the rotation zone. But that's how it sits. So you'd be using those probabilities, nothing based off yesterday's, what was it, the Indigenous Peoples Days? Because we got to have everything. We got to wipe out all the history of everything. Yen, pausing at this base. Only going to start watching if we get the key close below about 148.35 for the bigger pullback. Remember, it's starting to roll over, and we're getting to some exhaustion, and also we are still in the intervention territory. Euro, come on, Euro. If it does start snapping above the daily rotation zone, the next major area, let's take a look at this weekly, because this could, with the cycles at the bottom and the dollar, could continue the pullback area. The couple key areas I'd be focusing on for the euro is 106.65 to about 107. That's where I'd be focused if this starts breaking above the daily rotation zone. The pound, if it starts breaking above here, there's a lot of key resistance points. 123.10, then about 123.80. Key support now, I got to raise this up a little. Key support is coming in about 122, which is roughly coincides with today's low. Bitcoin, nothing. Let's get to spiders and the Qs. Sorry, again, I'm rushing through some of this. The spiders, still the next key target. If you're looking for a minor target today, 434.25. Next key target, 436.63. Then you still have the gap left behind of 438.64. And so 436.63, I definitely consider a stop raise from this little pattern right here. Key support. What is the support now? Let's see what we got right here. The major support's about 429.85 to 430. The minor support's about 431.30. All right, and this still, would this bounce in the double, which is triggered? Would this invalidate the bigger sloppy head and shoulders? No. We hit that first target area with the 200. This would not invalidate it. Okay? What would invalidate it would be a close above. It depends on which stop level you're using. I would use the 444.72. So it's got a long way to run before that. With the Qs, which triggered the double, 367.79 would be the first target for today. Then the major target area, 369.90, 370, and then 372.63. Fill in the gap left behind from Wednesday, the 20th of September. And now you can see this, again, I talked about it briefly yesterday. This wasn't enough of a pullback to invalidate it. What else? So that's it. The key pullback levels, 364.50, and then roughly about 362.50. Tesla, not much going on. There's the minor breakdown level will be about 251.50. Still the breakout level, 262.56. Other than that, not much going on there. Heading into earnings next week, next Wednesday. NVIDIA stalling at this 50% level. If we do get through there, 467.84. You're welcome, Jake. Do I use Ganzilla? No, I do not. I do not know anything about Ganzilla. Swissy US dollar has a daily double bottom. Yes, it does. I honestly have not looked at the Swissy. Almost to the first target, which interesting enough is the 200. 110.7, and then 111, 1, and then 111.50 area. So those are the targets, and I would still use conservative since it was against the rotation zone and you have a fair amount of overhead resistance. But interesting enough, this did break through a very strong resistance area. So any pullback would be to about 109.7 to about 109.9. I've not found the only thing with this, and I'm not going to call it astrology. The only thing that there is some stuff with moon cycles, and that's based off human psychology. I wouldn't necessarily call that psychology. I'd call that just a net, because it's not just being with the markets. It's actually human psychology and full moon cycles and everything else, how it affects the body because of the amount of water content in the body. But other than that, I'm not trading using astrology. So, again, you don't have to make trading that complex. Okay? I mean, Ganzilla just doesn't sound right. It sounds like something you'd get from sleeping with the wrong person. Man, I got Ganzilla. Check. I got Ganzilla. It bounced off the 50% retracement, COVID lows, April highs, plus close support. Intriguing chart. Yeah, there's that 50. You have the levels exactly right. That 50 and this key support area. Key support area coming off of, if we look on the weekly, at bottoms. Now, would I be, any bounce would be aggressive, but it could be played. It is an intriguing chart. Is this a double yet? Not yet. But you break above, this wouldn't be a double yet, but if you broke above here, you go into a single candle clear path here. So that could be a little bounce setup, especially with some sympathy from Pepsi earnings. Would I be looking to turn this into a multi-month hold? No. Because you're slamming into key. This could be a bounce play, but would not be a strong bottom yet for a multi-month rally. I'd be looking at key target areas besides the shorter term ones, about 54.50, and then if it did continue about 55.60 to about 56.50. It is an interesting chart, though. I cannot say that? Why can't I say that? Good morning, Richard. Oh, boy. Just, I was trying to have a little humor this morning, but that is a very nice chart. By the way, Pepsi. But remember, these are still overdone. Pepsi actually, this is fascinating. Let me flip these around. Hold on. I drew it the wrong way because I was having a mic moment. Pepsi's bouncing off the 50 to 200 week and some pretty key support, but this would be the same thing. Also, Pepsi, if you still look, P to E ratio, 28:10. Pepsi's not cheap. So that's just somewhat similar to Coke. I'd be watching for the bounce and the rollover plays. What's the P to E on Coke? I mean, we're talking about a consumer staple. Coke's a little cheaper, PE of about 22, but that's no bargain yet, especially if we're going into some slowdowns. So again, with all this negative overhead resistance, this has to do a lot of heavy lifting before I get interested in a long-term setup. Walmart has the same kind of pattern. And then I got to run. I'm sorry about that. Again, and pay attention to the latecomers today. There might be some time changes this week with the streaming. It's turning into a really not so good week. Yeah, you got the same rough kind of thing in Walmart, but Walmart, again, I'd be watching for a bounce and a possible rollover play slamming into some key resistance. These would be not things that I'd be chasing yet. Again, look at the PE on Walmart. If you're going into a consumer slowdown too, 30. Now, Walmart won't get, I mean, it's more of the bargain center, but geez, it's not a bargain from a stock perspective. So it's a bounce place only and then rollovers for me. With that, I'm sorry, I got to wrap this up today. Let's just peek back at the S&P. Not much going into the open, pretty quiet. The key levels for that I'll be watching, 43.80 for a breakout, about 43.67 for the potential breakdown. But I need some follow through a tick. Otherwise, I'll be watching for some back and forth. Only if it gets below 43.63 with a strongly negative tick will I start watching for the bigger pullback, because then we're into a clear path move. All right. And it broke 2 levels of key support after finishing the targets. So that's the only thing that would get me more negative today, really negative. Other than that, I'd be erring on the side of choppy. With that, I shall see everybody later. You wouldn't be chasing those things, but a lot of crazy market participants. Yes, I wouldn't be chasing those things. And again, you have to be nimble when going against all these rotation zones. Not saying it can't be traded, but you have to be nimble. All right. JP Morgan's still 86 a barrel. Well, there's a lot of variability in that if everything blows up. I don't know where Coco is. He has not shown up. We've even got a multi-day bounce and no Coco saying buying the dip. Coco's given up on the channel. Coco's given up on us. Oh, well. I shall talk to everyone tomorrow. Bye for now.